Welcome to Money on Tap. Money on Tap, your personal finance headquarters, where we bring out the professionals' experience and some fun in what we call three-dimensional investing, utilizing insurance, brokerage, and fee-based planning. That's what we do on this show. We look at all sides of the issues, and we bring a fully independent planning perspective to the table. Welcome to Money on Tap. You can reach us at 855-226-8551 or info@yourmoneyontap.com. And we're going to look forward to having some fun with you today as we talk about what's important for you to know in your personal finance journey around, well, folks, energy. Yeah, so can energy fuel your portfolio is what we're going to be talking about here on Money on Tap. And as always, it's good to be here with you, Ben Brayshaw. How are you today?
I'm doing great.
Dan, how you doing, buddy?
I am feeling good.
How can you not get excited when talking about energy? Because there's so many different elements to it. There's the stalwarts of what we're going to talk about, and in your energy, like your oil and your gas and that kind of stuff. But then we also are very much on the forefront of technology and the clean energy or an energy revolution, however you want to associate that stuff, but bringing it all home here today. And actually, this is going to be a couple of shows that we're going to wind up pulling together because the topic is so vast. The field is so vast. The resource is so vast. What other kind of play-ons I can't wait to get to in this. But before we get going too far down that road, you can reach us at 855-226-8551 or info@yourmoneyontap.com. And guys, do you have anything to add to this before we get going on Money in the News?
No, I tell you, the one part about energy that left me a little less than excited was hitting the pump this weekend. Filling up the tank is a whole different experience these days.
It's interesting how when oil hit zero.
I do.
Yeah. Well, the tank never reflected that, did it?
No, it wasn't zero, but it was.
No,
It wasn't zero.
Wasn't even close.
No.
The correlation, and that's possibly some of what's interesting around the energy sector, is this correlation that we will talk about. Why doesn't that happen, and how energy as an investment for you can be something that really can dislocate you in some different ways from what's going on in different parts of the market.
The thing about energy is that it's pretty much the integral item to almost everything that we buy, sell, use. I mean, it is like, if people don't understand that energy is the fulcrum to existence and how dependent we are on it in every accord, whether it's transporting material, making material, it's building, it's development, it's lifestyle, it's heating our homes. I mean, we use energy and it is just not slowing down. And I think looking at, oil, people think energy, they think oil, and the world is changing. They're talking about green energies and how is that good or bad, and can it meet our needs, and where are we at with that? And I think we're going to have a really good couple of shows here talking about energy and figuring out, the viability of energy, the types of energy, the complications with some of the green energies, some of the complications with basically traditional energy sources, and pros and cons to both, and kind of working through that, and then trying to figure out how that works into your portfolio. Is now the time to buy oil? I don't know. I mean, when it was $0 a barrel or below that in 2020, boy, that seems really opportunistic today compared to what it was then, right? I mean, you're up 1,000% and then some. So, yeah, it's going to be an interesting conversation.
Gonna need to get moving here, right? We're gonna have a lot to cover, and get us started here. We're gonna jump right into Money in the News.
Well, first up, we have an article here that's just right out of Yahoo Finance, which is actually kind of interesting. It's by Naomi Ludlow. well, it's from a USA Today article that she wrote, but Yahoo Finance is reporting it. Grocery stores' shelves bare. These products may be hard to find amid supply chain disruptions. I got to tell you, there's a lot of concern about supply chain. Some of it having to do with the cost of oil, some of it having to do with the number of people that are available to drive trucks in this country. The fear that truck drivers are going to vacate their role because of potential mandates we're facing as a country and how that all looks. And people are very, very concerned about the supply chain. Dan, you have some thoughts around that too, and I'm going to turn that over to you.
Yeah, it seems to be in the last week or so, all I keep hearing, and I'm not so gently getting reminded by my wife at home that, we better get the Christmas shopping done soon because there will be no toys on the shelves and how everything's going to get stripped bare and we won't be able to resupply until after the holidays. In fact, a couple of major retailers that that are near and dear to us have gone so far as to make those announcements, basically saying buy now. Half the cynic in me perhaps just wonders if that might be a little, fabrication kickstart to the retail economy and trying to get us all out there shopping a little earlier, a little quicker, spend a little more. But, reality is you walk around the stores and you can see a little bit less on the shelf, and we're starting to see at the big box stores some limitations on staples, and, you can only buy one of these, two of those. So there's got to be some reality to it. I'm just not sure it's as dire as some of what you hear and read. But, in that article is interesting, the list of things they told us to expect to not necessarily be available, I thought was, some of it concerning, some of it a little bit more comical. For instance, Ben & Jerry's might be running out of flavors. I thought that was, probably less than critical to the survival of our economy. But, one of those things
talk to you on that, right?
Yeah, I mean, my stepson's going to be upset, but, I'm pretty sure the rest of us might get by. But they talked about carbonated drinks. Again, necessity, maybe, maybe not, but...
No, but what's underlying that? Like you never would think. I would never think that. What is it? The fertilizer plants, which lead to the production of carbon dioxide, had to reduce their output because of rising costs. Like I would have never correlated ever that, and I just don't know enough about the carbonated drink industry. Apparently.
Yeah, there's probably a lot more going on under the hood than we ever wanted to or needed to know about that, right?
It's going to be an education for sure in how this world works. Whether you like it or not, you're going to be at some point in time influenced or affected here. It is truly an interesting piece of the equation.
As I was going through the list, I really didn't, Ben & Jerry's, carbonated drinks, chicken, coffee was okay. Diapers.
Wait, did you say coffee? Did you just say coffee?
I know. But I'm going through the list and nothing made me stop. Like even Heinz ketchup packets, nothing. I'm not stopping. Pot pies, McCormick. All of a sudden, I see Rice Krispie treats, still not stopping. Sour Patch Kids and Swedish Fish. Like whatever happened here? Like the next one on the list is toilet paper. So I mean, they clearly the author understands the priorities here. So I thought that was kind of interesting.
Let's get the Marines on that right away.
Yes.
Who do we got to invade to get Sour Patch Kids?
Guess what you're getting for Christmas.
Shh, don't say anything. That's interesting. I mean, these supply chain issues are real, and I think it comes back up into a Fox Business article that kind of corresponded to it. And I think we chatted about running these together. Small business owner, depending on supply chain issues, getting resolved quickly ahead of the holiday season. And this is a real issue. I mean, people are saying, we got to do this shopping, right, Dan? I mean, you're talking about your wife. And I mean, my wife's mentioned it. It is clearly an everyday conversation for people about where it's all coming about. And I honestly not sure that this isn't an issue. Like, I mean, I think we all want to think it's not going to happen, but I think the reality is we all know the likelihood is there's going to be some hiccups here. And there are some stores that the shelves are bare. And that's a concern. It's not where I'm at, but it is in some places in this country.
I had a little real life experience with that this weekend. My first grader had a good week at school. He did a couple nice things around the house, so we thought it was, it was due for him to get a little reward, and he wanted a Godzilla stuffed animal. Believe it or not, that was number one on the list. So we jumped out to Target and couldn't find anything suitable. So, Amazon fixes it all, right? So we found something on Amazon, bought it. assumed like everything else on Amazon will be here in a day or two or maybe 3. And, he was pestering me, when am I going to get it? When am I going to get it? And I honestly hadn't looked. So then I looked at my pending orders, and what is it going to be due until mid-November? So now I'm going to have to satisfy this kid for the next 3-4 weeks of, jumping around, where's my Godzilla? And, supply chain issue, household management issue, I'm not sure, but I'll be paying the price for that for some time now.
Yeah, Amazon Prime has the last laugh on their 2-day delivery now. So
they can deliver you to the moon in 2 days, but forget about the Godzilla, though.
Yeah, right. Captain Kirk. We should have had that in Money in the News. So next up is inflation. I mean, inflation is really a conversation of everyone is having across the board. And these next 2 articles actually tie together a little bit. But what is transitory inflation, and when will prices come down? This article, which is in Yahoo Money by Julia Glum, talks about the Treasury Secretary Janet Yellen weighing in on Americans' growing concerns about inflation this week. And they've changed the conversation around inflation. They've told us that, for the next few years, it's going to remain above 2%. But the problem is it's way above 2%. The latest measure put consumer inflation at 5.4%, which is astronomical. And that's just, I honestly don't think that that's, indicative of what level of increased costs we're paying. I don't know about you guys, but that sure doesn't seem like, my food bills haven't gone up 5.4%. They're up way more than that in the cost of food. Forget gas prices, which were up, 50% basically from a year ago. So that kind of scenario concerns me. But the idea of transitory inflation, the fact that this is going to be a temporary piece, is something that I'm not sure that we're really facing, because with inflation, there's always a laggard. So if inflationary costs start to subside and start to drop down, the inflation itself is still on the same trajectory up. For the same reason that when inflation first picks up, consumers have a contractual obligation. Producers have a contractual obligation with most consumers to supply certain metals and steel and everything else at a certain price. So even if inflationary costs for them to produce it go up and they have to pay more to actually produce it, so less profit, eventually they're going to catch up and say, hey, you know what? Our costs are down, but we're not going to reduce our total sale prices until we know this is a reality moving forward. So inflation continues to rise over time, even after the fact. So that's concerning to me. So I appreciate the transitory side of this, but even when we start seeing inflation kind of subside in an overall cost, like the cost of oil starts to go down or stay level, we're not going to see consumer goods continue to start flattening out. The cost is still going to go up for a period of time. I call it like the slingshot theory. It's still moving with the trajectory it has.
Yeah, so transitory might not be short term after all, right?
That's my thinking on a number of levels.
Yeah, some of the places I've been surprised to kind of find out how is this affecting some of our friends or neighbors or local businesses was really brought to my attention when I was picking up some donuts from a friend and a client this last weekend, that he was just talking about how he's managing the inflation in just the flour that he uses. Some of the products that he uses to produce those donuts have tripled in cost, and he's like no longer producing his products at a level that he kind of has that typical waste factor for the day to day. He's just making the bare minimum to meet the need of his business and his supply and his customers, and then when he's out, but triple.
Yeah, I think it's interesting too, and Raphael Bostic, he's the Atlanta Federal Reserve president, and he has stopped using the word transitory and to describe the ongoing inflationary situation. And he plans to call it the pandemic-induced price swings the nation is seeing is episodic. I think that's supposed to mean like longer than transitory, but I'm not really sure what he's trying to display other than, hey, listen, we've got we've got this episode of the pandemic, and we don't know what this really looks like, and we don't know what time frame it is. So to say it's transitory might be defining it into some other historical period of time or role or condition that you might see as normal. And he's saying this is episodic and therefore could last long periods of time, I think is what his ultimate meaning is. And that concerns me pretty heavily, and I think that does most of the country.
So for those of us out here still earning a wage, this is certainly a factor that we're, going maybe back to our own supply chain or our own bosses and saying, hey, this is where the fact of life is at. I need some kind of a raise or something along those lines might be one of those conversations. But one of the things that came across our desk here was this article by Gene Sahadi at CNN, which was about the Social Security benefits get a huge bump, but retirees need to do more to protect savings. And why I led into this with all of that was to say there's several people out here, a huge portion of our population that are affected by this transitory or episodic kind of inflation in a very different way than you and I are, with really no control over those levers to be able to mitigate the inflation factors here for themselves. And I'm sure everybody here and everybody listening knows somebody in this category.
We do, and I think, looking at Social Security is going to get an extremely high bump this coming year, 5.9%, which is astronomical, and for me, concerns me about the longevity of Social Security being able to be paid, because I think at one point in time it said we're going to run out of money in Social Security in 2034, and this is a pretty large bump, and that was based off of historical average bumps, and this is much higher on the side of any averages that we have for Social Security. I mean, some years Social Security has had zero bumps. I think this is whether you want to deem me a conspiracy theorist or not, when the government declares an inflationary event and what the inflation is, Social Security is going to have to tail into that. And I've always believed that the government has tried to make inflationary numbers significantly lower than they are in hopes to keep things like Social Security and other costs that are run off of their inflationary numbers at a lower increase. That being said, if that thinking is true and accurate, again, my opinion, then 5.9% is a scary number, because that's awfully high, and for the government to have to admit that we're at least there, which is much higher than that 2 or 3%, that they say they want to run, inflation at for a number of averages for years. Hey, that's a big deal. For the people who are collecting, I think it gives us a shorter term opportunity to preserve Social Security longer at the same time. So that's a concern for me. I'll hand it over to Dan. I think he has something to say.
Yeah, just, a lot along those lines. The last time the Social Security increase was anywhere near this high goes back to 1982, so 40 years back. One of the conditions that was a driver in that and was part of reality back in those days was, astronomically high interest rates. So these people, who are living on a fixed income, could theoretically take money in a kind of a safe way and put it in the bank and earn a comparable rate to offset some of that increased cost with their savings, even while they got this COLA increase from Social Security. But today that's not true, right? You don't have the rising interest rates that accompany that rising inflation rate. So you put people in a situation where they're either forced to draw down from retirement funds at a scarily fast clip sooner than they expected, or to take more risk inside of their investment portfolio to try and catch up and match that high inflation figure that's out there for just the cost of living. So you're putting people in a kind of a really difficult situation there that doesn't spell good things out for their future.
You bring up a really interesting point here, Dan, which I actually had not thought about, which was the comparative there to the 80s in where interest rates were at with inflation happening at where it was at. There was a safer place for them to put their money and earn interest, right? Those bond-like vehicles, those CDs at the bank, paying out. I think last time I remember we did a show on this kind of stuff, it was somewhere close to 11 to 13% on a CD, if I remember correctly.
Oh yeah, I've talked to people that were like in the 15s, 16. I mean, crazy numbers. But go ahead, Seth.
But the housing effect in there as well. People getting their mortgages at something like 15 to 20% interest on them as well. So such a completely different landscape And it's always easy to look at grass is greener on the other side, of course, and I just wouldn't know where to begin with that.
Well, I think the thing is that's why there's been so much attraction to the high yield space, in the stock world. I think that's we get calls on it. People talk to us about it. They're looking for things that will give them a yield. They're willing to take more risk because they know they can't keep up with anything near the inflationary scenarios that are going on with bank holdings. But yeah, you're taking on a lot of risk when you're looking at high yield, and you can't get that high yield in bonds right now, unless in even the ones that are high yield bonds. Hey, listen, you got issues. So yeah, it's a good conversation to have. It's something that, if you have questions about how to find interest, how to find rates, how to find yield, that's something you can give us a call on.
Well, that's going to do it for us in Money on the News. You're listening to Money on Tap, and you can reach us at 855-226-8551 or info@yourmoneyontap.com. Folks, when we come back, we are going to get into our show topic here, which is Can Energy Fuel Your Portfolio? It's going to take us a couple of shows to really fully unpack all of the information that we have here, but that's what we're going to be talking about. Don't go anywhere. You're listening to Money on Tap. We'll be right back. Folks, we have a lot of fun doing this show, Money on Tap, and Ben and I have been financial planners for years and years, and our goal here with you is to bring you into the room, have the conversations that we have. We think these are critical conversations for you, but we understand this is a limited space, and what we'd love to do is to open the doors to you with us at Brayshaw Financial Group, so you could experience what it means to have three-dimensional planning in your life. Let's take a look at all sides of your situation, your scenario, and see how we can put together the best plan possible, taking into account your risk. How much can you have in the market? How much do we need to have set aside and doing different things for your life? That's what we do as planners, how we engage with you, and we welcome you to do that with us. You can reach us at 855-226-8551 or info@yourmoneyontap.com. Now, if you have $250,000 that are investable assets today, our planning is free to you. We want you to have the playbook to have a successful experience in retirement. Give us a call, 855-226-8551 or info@yourmoneyontap.com. Ben and I welcome you to Brayshaw Financial for complete wealth management.
Now back to Money on Tap with Ben and Seth.
Welcome back. You're listening to Money on Tap. You can reach us at 855-226-8551 or info@yourmoneyontap.com. And we are going to dive right into Can Energy Fuel Your Portfolio conversation today. And for starters, you know what? We're going to go ahead and just start knocking out some of the benefits that we see to this energy landscape. Dan, would you like to get us going on that?
Sure. I mean, I think the best way to go about it is we'll talk about the green energy world versus the carbon fossil fuel world, and really some things to consider and to keep in mind about pros and cons of those industries. And then in segment 2 of this show, we'll get into a little bit more specificity about what individual companies are doing and why they may be positioning themselves for a bright future based upon how they're addressing conditions today. But just as kind of a recap and a little bit of education for those that are listening on the whole green energy topic, right? So there's really 5 or 6 core sources of green energy that we wanted to get into, which are pretty straightforward for the most part. I mean, wind, I think we all understand, how the windmills set up. We see those along the coastlines, and it's a great way to theoretically capture a whole lot of energy without, from a resource we don't need to drill for or go find. It's just literally there. Hydropower, which, through dams and rivers, great source as well. Biomass, which is a little bit interesting. That's, essentially energy that can be produced from composting organic materials, which has a couple of additional benefits besides just the creation of energy for us. The ocean, the motion of waves, how you can capture that. And then geothermal, of course, which is, heat that comes from below the surface of the earth. it's another thing that's just exists. And how do we best tap into it?
When I was reading through some of this stuff that we were kind of digging out, I was kind of taken back by like the idea that the ocean, like the falling and rising tides, that natural that they're harvesting that energy that's happening. I mean, we do a lot in the energy sector, but some of these, like, this isn't even the whole list, which is really interesting. Like, there's just more information out there about the different things that people are doing, like even utilizing, snow and plant growth. And I mean, it's just like the things that people have come up with to harvest energy it's honestly a hats off, like kudos to the scientific community that has just learned how to cultivate value from our earth in a very unique way. And I mean, that scientific discovery is just amazing. It just caught me off guard how much depth there was to this space.
It is a lot of fun to start to realize and understand more about, our planet and what some of the resources are that we have for energy, and how we are surrounded by energy, and the technology that they're starting to put into place to harness that or to convert that into a source that we can use for fuel for our homes or our cars or our businesses or whatever, wherever that goes into. It's extensive, and there's more to come too. So it's an exciting part of the conversation that we get to have, and we get to look for as we're looking towards the future of this sector, and how we can participate and our clients can participate with that.
Yeah, some of the pros to it, right? The things to be excited about in our future, even though they're not necessarily all here today or not viable in the way we hope that they would be. But the pro side of renewables or green energy is, first off, it's eco-friendly, right? That's the whole point. How do we harness this energy that's out there with minimal damage to the earth that's producing it for us? Number two, it's renewable, right? So sustainable, renewable, plentiful. It exists, as Seth said. It's just out there.
Just thinking about it, it's like we all. I mean, just the kind of even just jumping back a hair too, and talking about that as I'm thinking through all the different pieces that we chatted about, kind of pre-show. It's like everyone knows there's wind and solar, right? And most people have an idea that there's hydropower and geothermal, for the people who are a little more advanced, might even be aware of there's something out there and they're not really sure what it is. But the eco-friendly renewable resource has created this to be an area of interest. And I think the thing is that a lot of these investment vehicles over the time period, have grown more by interest than by their value. We're going to get into that in a little bit, but it's caught the entire public's eye on every level. I think that's the one piece that has really driven the energy space, is that everyone's kind of interested in how they can be part of this. I think that's exciting.
Yeah, some of the other benefits that we found here as we got prepped for the show is, the theory that it could stabilize global prices, right? So less international competition, and you're not dealing with organizations, at least at this point, like an OPEC, that are trying to control supply and demand. So in theory, we could get levelized long-term costs for this renewable energy. Not there yet, but that's one of the potential benefits. Maintenance of facilities, theoretically they're cleaner, involve a smaller workforce, more leveraging on technology, boost the public health. No smog. We're not burning things off to get there. It can be used for recycled waste, right? The biomass notion, right? You can get some of those organic materials that would otherwise end up in a landfill, and we could turn those into a potential energy source. And then as a technology, it's got the ability to improve over time. And we talked about, the size of a solar panel today. As we look at technology as it's advanced, every industry has been part of over time, things get smaller, they get cheaper, they get more efficient. And, in theory, with hope with this particular industry, the same would follow suit. And that can lead us to some exciting new potential there as well. And again, less reliance on foreign sources. How long has that been an issue when discussing energy production here in the U.S.? I mean, it goes at least back to the 70s, right? Oil embargoes and different things where some not necessarily reliable partners around the globe have a little bit much too control over really critical levers in our economy, and how we can do our best to kind of sever ties there and be independent once again.
I think one of the things, too, I think the technology piece around, either the development of these types of harvesting mechanisms, whether it's the size of a solar panel and how much energy is produced out of a solar cell. Some of the things that are going on, I think the general public understands that. But then there's a whole nother piece to the technology, which is preparing for its creation too. Like the idea that, hey, the sun's going to rise at this point in time, and the distribution of that power between storage and usage in between, and how they, mechanize that is also really important. So there's a lot of different efficiencies that can be brought about, not just in the solar, for example, using solar in the solar creation. I think that's very interesting. And the companies are going to come around and how to, mitigate its distribution and where you produce the solar and getting it to the right grids at the right time, because that demand is a little sooner, right? Like we want, New York is going to turn on before, California does, right? So from a solar perspective, but what's going on in these different cities and how are they moving the energy around, whether it's wind and does the wind turbines, we produce all the wind and we push that out first because there's still wind being produced, even though it's nighttime, and those are very interesting. And I think there's also the idea of, you can't put solar arrays, all over everywhere because, this clearly in Alaska, certain times of the year, there is no sun. So, solar is not going to be the number one provider there. We're going to talk a little bit about some breakdowns in that. But I think it's really interesting about, as we learn how to use green energy, there's a development in that process as well.
One of the things I've noticed, if you just are in an area where you have those big turbines, the wind turbines that produce energy, quite a few of them over here, it'll be surprising how there'll be a fairly windy day and you'll look across like these, I don't know what they call them, but they're like fields of turbines after turbines after turbines. And there'll be like 1 out of every 5 that's turning. And I mean, either that has, the only thing I could think of without really diving in or asking somebody that really knows is that possibly the grid's full, or, they've got enough energy for the day or something like that. And they're just not trying to harness or store that energy. But it's pretty interesting, the cost of what those are to put in, and they're just not always working when you see them out there.
Probably leads into, the future efficiencies and the developments that are to come. That's a great question. I mean, we have it all set up. It's at tremendous cost to get those things there, and then you sit there wondering why they're not on.
Yeah, I know. I think the same thing. I also know that they have to turn them off at wind speeds of it's like 18 or 25 miles an hour, which to me doesn't seem like a lot. It seems like, hey, the more wind you got, the more energy you're going to create. But it's actually really dangerous. And then sometimes they have to shut them off. And that happened in Texas this last year. And they couldn't get them going back up because they had frozen. They had to actually spray them down with petroleum. I think that was one of our news articles actually this last year, which was kind of a funny irony piece. You have to get the green energy things going with the petroleum and they're hosing these things down with to de-ice them. It's kind of an interesting conversation. So there's definitely some uses of it that I don't understand either.
So it ties us right into some of the the cons of this, right?
Right.
Why it's glorious. Why it isn't the best solve for us at all times. And con number one was low efficiency levels, right? So the theory's there, the science is there, the manufacturing's there, and we plug all these things in and set them up at point number 2, tremendous upfront cost, right? And then where is it getting us?
Yeah, the thing is that I keep hearing, and this was even 5 years ago, we're 5 years away from making solar truly viable. We're 5 years away. Like every 5 years I hear that. It's like every year I hear it's 5 years away. And, the development of this technology is moving at such a rapid pace that, these fields of solar panels are going to be thrown away in 10 years or 15 years. They're just not going to be efficient enough. And the demand continues to grow. I think the one thing I've learned over the years is that no matter how much green energy we create, minus the COVID period, every year we have used more and more and more oil than the previous year because our energy demands are growing at a rapid rate because everyone's got an iPhone, everyone's got a Samsung, Google, whatever, and everybody's got an iPad or a Droid this or whatever. Everyone's got a laptop and a computer and 2 TVs, and the demand for energy is rising at a rate that I don't think anyone's prepared for. And it's being proven by the fact that, we're producing more and more green energy every year, but we're using more and more oil every year too. And that's really scary. If we were really being good on our green energy production, theoretically, our oil usage would at least stay level, but it's not. That just shows you that the demand that we're building we need to go green. We need to use less power is really what the story is, if that's going to be the direction we try to go even more so.
Yeah, some of the other limiting factors that are kind of working against this being the solve for the here and the now, right, is expensive storage costs, and maybe that has something to do with these windmills being on or off, right? So once we've harnessed that energy, we've collected as much as the local battery can store. It's not being used today or right now. What's happening, right? So there's an inefficiency in that. It's not always commercially viable, right? As I think that was to Ben's point. It's a nice thought, but Ford can't run the plant. It's strictly on solar. So they have to stay in business. They got to keep producing. It just isn't the solve yet. And as the goal of it all, right, is to save the planet, and green energy still produces pollution. So it's not in and of itself a net zero production of energy. It's still not there yet.
A term there that I think we're going to probably get into a little bit further down the road here, but it is that net zero, and who's out there actually creating the calculations and the quantification of that net zero. But what is coming out of the earth to create these new technologies is a part of the question that really doesn't get addressed in a lot of areas yet. It's been so focused on the potential for this energy or this space to develop. Even though it may not have that commercial application, and the benefits being, maybe we're discovering more in this process than of developing this energy that could lead to some other kind of a factor in converting energy.
You're right on there, Seth. Too. I think the idea that there's going to be pollution. We are going to pollute this earth on one level or another, right? I mean, that's part of the consumption process of living in this world. But I think the thing is that we don't do a solid reporting piece in general regarding the types of pollution that are created. For instance, all these batteries, all this lithium that we talk about, and finding lithium discoveries, like Canada and the U.S., because it pollutes the atmosphere so bad, we have regulations that we can dig it up out of the earth, and we can package it into a vessel, and we can ship it to India or somewhere in Asia, and it can be refined there. But the polluting is so bad that we aren't allowed to do it here in the United States. But it's still the same earth. So you think about that pollution is still going into our atmosphere. That's still a problem. The other thing that concerns me too is that we're trying to limit the use of oil, but at the same time to create every solar panel, every windmill, run every machine, every manufacturing company out there to create all the pieces of solar and wind and all these components we're talking about requires oil. And we're talking about a consumption of oil at a level we've never experienced before. I've always said to people, I'm like, hey, listen, we use oil, but that's not the oil needed to produce the green energy we're going to need to burn just to create the green energy. And that volume of oil is at leaps and bounds greater than we use in a year. And I think over the next 5, 10, 20 years, we're going to use more and more oil than we could ever have fathomed just building most of this green energy. And I have a concern, personally, that might shock our atmosphere even greater, because not only are we burning the oil we already use, but if we burn 3, 4, or 5 times more oil than normal just to create the green energy components, then we got a whole nother problem. If it's affecting our ecology and our globe at the level that we're currently using, and all of a sudden we ramp that up 3, 4, 5 times more, then all of a sudden we got a whole new issue, because these are green initiatives. These are not the things we've already done. They're saying we need to do all of this. We need to build this at this massive pace. All that money is going to go to manufacturing of this stuff. How is that manufactured? Through more oil usage. Now, I just don't know. I'm not a scientist, but my thinking is if we use this much oil and that's really, really bad, if we use all of that plus 3 or 4 times more all at once, how does that impact our globe? Is that going to put us into a whole nother problem at an amplified pace that we weren't prepared for? Is that something that, versus dripping it in slowly? I don't know.
Good questions. And we'll try to get more into unpacking this topic of energy and can energy fuel your portfolio. You're listening to Money on Tap, and you can reach us at 855-226-8551 or info@yourmoneyontap.com. I am confident that as you've been listening here today, you have some really good questions and things that we haven't even tapped into yet. Please send us your questions, and some of those, if we have answers for you, we'll try to get back to you right away. And if not, maybe it's something that we can pull into a show here for the following week or to come. You're listening to Money on Tap. We're going to take a quick break. We'll be right back.
If you're listening today and, your questions are outside the box of estate planning or financial planning or any number of the pieces that we kind of traditionally talk about, don't forget that Brayshaw Financial offers auto, home, and business insurance. And we have an entire department that handles all of that for you. Give us a call at 855-226-8551 and be happy to take care of those needs for you. Or email us at info@yourmoneyontap.com.
Now back to Money on Tap with Ben and Seth.
Welcome back. You're listening to Money on Tap. You can reach us at 855-226-8551 or info@yourmoneyontap.com. And today we are talking about clean energy, how to fuel your portfolio. And so far, we've really just covered some of the pros and some of the cons in this field and some of the exciting technology that is here and yet to come and viability and, all that's good words and all that good stuff. And to get us started kind of in the more of the, how do you want to say, investment side of this show, Ben, would you like to tee us up on that?
Yeah, I'd love to. I think that the idea of investing in energy in general makes a lot of sense across the board. I mean, how you invest and what you buy and so forth, obviously buyer beware, but energy is going to be playing a large role in all the infrastructure bills, all the different stuff we're talking about, whether it's to create green energy, whether it's fossil fuels or renewables, whatever it is, energy is going to play a large role. And, we've seen things happen in the energy space that kind of dictate the fact that we're going to see higher prices. I mean, when we look at what's happened in the UK over the last 10 years, the cost of energy there is up almost, I think it's 700% in the last 10 years. A lot of that having to do with various problems inside some of the green energy initiatives that they had already put out there, and then having to go back towards, fossil fuels to offset the energy demand that was was a shortfall. For instance, they had a low wind year for one period. It was kind of, unforeseen, right? You can't predict that stuff. So that viability is a concern still out there, and that means that fossil fuels on some level are here to stay. But on the green energy piece, in the investment world, the green energy space has really grown out of popularity significantly as well on top of its demand. And I think we're going to see more of that growth specifically through the sales of the demand that's going to be forced into our economy, forced into the globe between the Paris Accord and the number of the things that the U.S. is doing between its green energy initiatives and so forth. But for instance, over the last 10 years, we've had a 422.7% against a 59% increase versus fossil fuels. So green energy has grown 422% over the last 10 years, where fossil fuels is 59%.
422 to 59.
That's enormous.
7 times. 7 times.
I don't see that we have a massive profitability, scenario. I mean, just even in the pros and cons that we've talked about, the upfront capital costs alone on green energy is too astronomical to even start making money on the shortfall. And this, one of these articles from Forbes that we're quoting here, they even talk about the fact that banks have gone out of business. Solar companies have gone out of business trying to get off the ground. The capital outlay is just monstrous.
I think there's two clear drivers to that, right? Number one is just the speculative notion of investing. It's new. It's an interesting concept. The future uses and the future revenues are easy to see. you just don't know how far out they are, right? So speculative investors will get into something like that. And then the other one that's got to be a bigger player in this is simply the creation of these ESG funds and EFTs, or ETFs rather. So there's these investment vehicles, these bodies that are trying to leverage and take advantage of the marketing benefit of allowing people to invest into these green energy companies. But in order to be out there, right, they have to purchase up significant volume of the market, right? So just the creation of those, I think, is driving the price, because they're competing with each other and driving up the price of each underlying investment as they do.
One of the things I have the tendency to try to take a look at here is, under the law of large numbers and within the marketplace, what that looks like is volume. How much money is moving into these places? And it's one of those indicators that we take a look at when trying to understand what the market sentiment is here. What is the market thinking? How's the market behaving? And some of that can look like frothy emotional appeal, which is a huge push of volume into the market, a bunch of people buying at this moment, and that can be one of those indicators for us of a market peaking and really pulling back and having a downward cycle. But another part of that, or the other side of that, can be too, is that unless you are somehow a contrarian or a short seller of the market, you have the tendency to value the market and the efficiency of the market, and the managers that are pushing a huge amount of money in certain directions, kind of knowing what they're doing, having a better sense of what the outcome might look like here. So the risk I see is this a short-term kind of a trade? Is this one of those that people, the marketplace has said, yeah, no, we like it for now, but could it be the next real estate? Is it the next boom, bust part of our investment cycle here? Right now, everything seems to be in the trend of, no, this is perhaps a longer term trade, and one that you're going to want to hold on to because of the understanding that we have of the viability of these resources and how money has moved into this. But buyer beware is where I come back to in that, and just understanding this could very well be a pretty darn choppy trade as you're getting invested.
Yeah, I think that's some wise advice, Seth. I mean, I'm just thinking of like some of the solar ETFs that I've looked at. I mean, they've skyrocketed, somewhere in February of this year, and they were way up there and so forth. They come crashing down. They're they're still significantly below that period high. Again, we got this huge performance that we've seen in these holdings, and yet they pulled back, and yet they're still that high. So the concern is if we were probably reporting this in February, that return, Dan, would probably be way over 422%, right? On the, and so, I mean, these things have pulled back anywhere from 15 to 25% of their peak value, and that's concerning, because it's the performance from an actual. If you're buying an investment because the company's profitable and they're making money, it's not there yet. So it takes really super wealthy companies to invest in it with the profits they've made from fossil fuels most of the time to actually make these viable long-term investment programs. And that's just kind of an interesting point. That's the solar space. Hydro seems to be a little different. Hydro is very interesting because hydro's been around so long. We've been harvesting turbines on some level for centuries. I think this brings us to another piece. And I think before we wrap up, I want to talk a little bit about the fossil fuel space and kind of jump into this so that we can preposition all of what's going to come in our next show. But, there's a lot of ways to invest. And, for the person who's looking at more of the core energies, where it's the fossil fuel space, there's three spaces. There's the upstream, the midstream, and the downstream to invest in. The upstream is your exploration and production of oil and natural gas. That's oil fields. That's the drilling. That's the Texas black crude conversation, that kind of thing. The midstream is what we call things like toll roads or the transportation of that oil. That could be oil pipelines. That could be railway organizations. transporting the oil. It could be everything from natural gas distribution through a city, a number of different midstream pieces. The downstream is kind of the refining and distribution of the petroleum itself. So creating the gasoline and getting it to the car. Okay. And so those are the three different ways of the areas that you can invest in the fossil fuel space. With that, I'm going to just pass this over to Dan a little bit and have him talk a little bit about how to analyze the oil stocks that we do.
Yeah, it's important to take a look at kind of a couple key categories when you're trying to kind of take a look at the whole oil industry or the fossil fuel industry and decide what may be the best opportunities for you. But a strong financial profile is always important, right? What's the balance sheet look like? What's their bond rating? There's different indicators there that we could walk you through about, how do you evaluate a company from that perspective, their financial profile. Secondly is a low cost of operation, right? So the article that we researched here, references a company's ability to be profitable at a $40 barrel of oil, right? Or to have their buried costs exceed no more than that. So looking at a company that is going to be, because they control their costs, a little less susceptible to fluctuations in the barrel price, right? That's a key indicator for them. And then diversification, which is a term that we use here a lot, talking about investments. But in this sense, it's kind of twofold for these energy companies and oil companies. It's, where are they located and where are they drilling, so that you want to have a diverse footprint of where you source the actual resource. But then secondly, and kind of a newer trend in that is, are you strictly an oil company? And Ben hit on that a few moments ago, whereas a lot of these companies, the key players anyway, you want to see them make that transition into an energy company. So while they continue to drill and use the fossil fuels and profit from that and deliver the resource we all need, what are they doing to look down the road and be a player in the next energy world, right? The next generation of energy resourcing and delivery. Are they making investments there? Are they good investments? So you want to evaluate that and take a look at that. In particular, we saw, and we think we shared the story before, but kind of a hostile takeover on the board of Exxon, right? It's a key old stalwart oil company. We all know the brand. But they've had a couple activists get onto the board there to really focus that company in on drive them towards this renewable future.
Yeah, that was a pretty interesting scenario when it was a hedge fund company, a small one too. They had just pushed and leveraged. I think they got 2 spots on the Exxon board, ultimately to push, green energy initiatives. They felt like there was not enough being done in that space. And it was an interesting, it was something that was all over the news if you're in that space and watch that stuff. And I look at energy and I look at Exxon and I look at all the different things. And, some of these energy spaces, they're still suffering way below their, all-time highs. You look at a number of these different companies. You can go to all the major oil providers out there, and they're still not where they used to be. And we have oil at $80-some-odd a barrel, and we have companies talking about it going to 90. These companies have wells that are producing oil way below $40 a barrel. So some of these companies are really, I'm really curious to see what happens. And I think some of this really depends on, what the demand is. Because just thinking about some of our money in the news articles today, if we don't have product to deliver, then we're not going to use the oil, right? Trucks aren't just going to run empty. The shelves are going to be bare and there's just not as much stuff to move for Christmas or food or this, that, and the other thing. There's going to be less oil used between shipping it because there's nothing to ship from China if that's the case. And if nothing comes off the boat, then, we don't have trucks to move it. So we could have $90 barrel oil, but these companies may not have anything to sell at $90 a barrel. So, or to the volume that maybe they're used to. So that's interesting. I'm really curious to see this episodic oil usage to mimic the Atlanta president of the Fed over there. Is that going to play a space here in our oil usage because we have all these other things going on? And that's conversation for our next show, I think.
Thanks for joining us today. You've been listening to Money on Tap. You can reach us at 855-226-8551 or info@yourmoneyontap.com. Also, we're in a podcast. You can find us at any of the podcast venues out there. We appreciate the likes and the listens. We're also at Facebook at /3D Investing and Twitter at BFG_LLC. We appreciate you joining us here today, and we hope you make it a great day and a great life. Thanks for joining us with Money on Tap.
The views expressed are not necessarily the opinion of this radio station and should not be construed directly or indirectly as an offer to buy or sell any securities mentioned herein. Investing is subject to risks, including loss of principal invested. No strategy, product, material, or tool mentioned can assure a profit nor protect against loss. Please note that individual situations can vary. Therefore, the information, products, materials, or tools mentioned should be relied upon when coordinated with individual professional advice. Past performance is not a guarantee of future results. This show may be subsidized in whole or in part by a product sponsor or issuer. Securities and advisory services offered through SagePoint Financial Incorporated, member FINRA SIPC, and a registered investment advisor. All other services offered through Brayshaw Financial Group LLC are independent of SagePoint Financial. SagePoint Financial and Brayshaw Financial Group do not provide tax or legal advice. Main office is located at 116 South River Road, Bedford, New Hampshire, 03110, and can be reached at toll-free 855-226-8551.
Well, bye.